Today, now we are going to discuss about the customer charter. Right now, the main theme or the topic that we need to discuss with you all is the governance requirements and relates to the branch operations. So last time we discussed about the anti-money laundering regime and what we should do and what we should not do, what are the consequences of money laundering. So today I thought, since this program is focused on the branch operations, to take this very important area, the customer charter, which have been very clearly defined through the Banking Act Direction number 8 of 2011, right? So if anybody in the audience who are from non-banks, a similar guideline has been subsequently issued to the non-banks also. It is known as the customer protection direction. But the content of both are the same. So I will focus mainly on the Banking Act Direction number 8, 2011. But the content in both these, whether this customer protection in terms of non-bank and customer charter in terms of banks, the content part is the same, right? So as an introduction, this charter, it sets standards of fair banking practices envisaged by customers when
Sir,
they
excuse me.
undertake transactions with licensed banks
Sir,
and provide guidance to licensed banks, of course, to the non-banks as well, in terms of the customer protection code or the guideline or the direction that I mentioned for non-bank, to adopt a code of conduct on customer protection. The charter also includes a set of customer obligations. So it is a charter that talks about both sides. We are going to talk about the customer charter, which is a regulatory requirement, especially in terms of the branch banking. So this applies to banks as well as non-banks. In banking terms, it's Banking Act Direction number 8 of 2011, customer charter for licensed banks. Banks and the licensed banks, specialized bank and also non-specialized bank. The same thing applies for the non-banks also in BFIs. The term they use for that is the Customer Protection Charter. So the content are the same. So I will focus on the banking part and then take you all through this requirement. So it talks about the basically the obligations on the part of bank towards the customer, as well as it talks the obligation of the customer towards the bank also. But if you take in a kind of a proportion, it's about 80 to 85%. The charter talks about the banker's obligation towards the customer, but end of the day, end of the document, it talks a little about the obligations of the customer towards the bank. So the main requirement under this, the bankers have certain key requirements and key obligations to meet. One of the key requirements under this customer charter is the bank should have a document called key fact document. So this key fact document is in relation to all the products and services offered by the bank to the customer, and it has to be in the languages preferred by the customer. So initially when this came out, it had this word languages preferred by the customer. It's a very kind of open requirement. So if the customer prefers a language like French, you got to provide in French terms. But then the banks got together to the compliance association. We met, and then finally, though it is worded this way, it is the requirement now is to provide it in the language preferred by the customer, either in English, Sinhala, or Tamil. So from a bank point of view, you need to have the key fact document in all three languages and provide it to the customer in the preferred language, English, Sinhala, or Tamil. Not only so we'll see what these key fact documents are. I will describe it later. So in addition to the key fact documents pertains to the products and services, all the advertisement by licensed bank should contain factual information. So it should not be information that misleads the customer, right? I think if you see because of this only, the banks, when they publish advertisement, you say in a corner, they say conditions apply. So because that is to probably to get over the obligations, the certain obligations that have been casted on the bank by this protection, because you need to give all material information when you're advertising a product, when you're publicizing a product or a service, right? So the take home stuff is when you're advertising or publicizing, there shouldn't be any material information which can mislead the customer so that he may uh, be misled when deciding to patronize the particular service, or when a customer decides to take a product that have been offered by the bank. Then the customer has the right to receive factual information. Likewise, the bank has an obligation to give factual information. So everything in this world, it has obligations and rights. So any relationship you take, especially the banking, not only banking, even in a personal relationship you have, there are obligations and there are rights. So you just take a situation where a parent and the children, son. So there are certain obligations on the part of the parent to provide their children with the basic education, shelter, food, and all that. So similarly, there are certain rights the parents will exercise on their children. So any relationship you take, there are obligations and rights. So similarly, here again, you have obligations as well as there are rights. So obligations, the information, from the customer's point of view, customer has the right to receive certain factual information and to have a proper understanding of the financial products and services offered by the bank, right? So accordingly, certain key information like the interest rates on all deposits and advances, loans and the deposits, the interest rates need to be publicized and made known to the customer. Then if you are the banks are selling foreign exchange, so the buying and selling rates of the foreign exchange also needs to be publicized and made known to the customer. The credit rating of the bank, right, with underlying specifications, if any, right, also needs to be made available or made known to the customer by the bank. That is why probably you see in your banking lobbies, these are displayed, right, in order to meet this regulation, because it's an obligation on the part of the bank to make them known to the customer. So likewise, the customer has a right to receive this information and know with whom that I am dealing with and what are the products that I am patronizing through this bank. Then coming down, the bank needs to tell the customer about the details of the financial ombudsman. Right? You know who the financial ombudsman is. Financial ombudsman is the person to whom the customer can go and complain. Not only the customer, even the bank can do that. So if they have an issue which cannot be resolved, they can go to the financial ombudsman and seek redress. Right. So information about who the customer, the financial ombudsman, what are his contact details, then the maybe the address of the office of the financial ombudsman, all those needs to be given to the customer, and these are displayed in the banking lobbies of the most of the bank, including the credit counseling center. So there's a center that is operated. It's probably, I think, it's functioning under the uh, wings of central bank as part of it. Uh, but anyway, I'm not 100% sure whether it is functioning under the wings of central bank. It is located in the central bank training center in Rajagiriya. Yeah, I think it's not functioning under central bank. It's a body that have been established for the customers to go and seek kind of counseling and advices with regard to their loan. So there are a whole heap of customers who seek the support of this counseling center in order to get their grievances addressed and also to get more information. Then the banking hours, the holiday notices. So you see in your bank, the banking hours are clearly displayed. When there's a holiday in between, it is displayed to say that, okay, tomorrow, or giving the name of the details of the date to say that the bank will be closed for customers on such and such a date, being a special bank holiday, public holiday, like that. Any holiday, special holidays falling in between, other than the weekends and the poor days, other details the bank need to publish. So any other relevant information, right? So we will see what it is when you move on, right? So what is the take home stuff in this? The customer cannot be kept in dark in relation to the products and services that you offer. He needs to be given very clear understanding of as to what he is patronizing, or as to what he is paying for, or as to what he is being offered by the bank. So under this factual information, to understand the products and the services, the banker is supposed to issue periodic statements to the customer, right? So this periodic statement can either be in form of a printed document, or it can be in form of an electronic document, like a email, or mainly an email. Uh, in order to give an understanding about the type of transaction that has gone through the customer's that particular account. So if it is a deposit account, then customer is issued in terms of current account. Of course, there are current account statements that are issued to the customer under normal circumstances on a monthly basis, but the customer has a right to call for this statement. Some customers do call it on a daily basis, some call it on a weekly basis, some may call it on a fortnightly basis. Whatever it is, customer has a right to receive a statement, either in printed form or in electronic form. So it applies not only to current account, it applies to all accounts. Let it be a savings account, let it be FD account, let it be even a loan account, right? So the customer needs to be issued a statement. So current account statement, yes, we know we have been issuing right from the inception, like it's going the month end. Some customers, as I mentioned, may take it at a more kind of shorter frequencies. But how about the savings? What is the statement we are issuing? So the conventional type of banking, there is a savings passbook, right? So that's the statement. So the customer can come and have his passbook updated, right? But since of late, the banks, so most of the banks have done away with the passbook, and the customer can be issued an electronic statement on the passbook, right? So whether it's a passbook or electronic statement, what matters is that information needs to be given to the customer. So how about the loan accounts? The requirement applies on the loan accounts as well. Even on FD, you will see Once the FD is issued, it says periodic statement. It doesn't clearly say monthly, right? As per the banking practice, periodic statement means the bank can decide. Even FDs, there's a maturity period. So every time the deposit matures, there's a statement going from the bank to say, okay, your FD has been renewed under these conditions. So even if it's under automatic renewal, the statement goes to the customer saying your FD has been renewed and this is the new deposit amount and this is the new rate and this is the term and all that type of information going. So the loans also, most of the banks do issue this loan statement, but I know some banks still may not be issuing. But remember, if that is the case, then it's a kind of a deviation from the customer. These are, remember, these are direction. It's not a guideline. So when central bank issues various instructions, it can come either in form of a direction or it can come by way of a circular. It can come by way of a guideline, right? What are the implications of this? Direction means it has to be obeyed. It has to be fully complied with. There's no way that you can deviate because it's a direction. It's a kind of an order on the bank. Do it this way. So the customer charter that we are discussing or the customer protection in terms of NBFIs, they are directions issued by the Bank Supervision Department for banks and issued by the non-bank supervision for non-bank NBFIs. So remember, it's a direction. So there's no way that we can deviate. You have to fully comply with this requirement. Right. Then, so you need to tell the customer about the accounts that are transferred to the dormant category. So, now this relates to the banking operation. So if a particular account is not operative for a particular period, so it's from bank to bank, it varies on the risk appetite. So generally, if an account is not operative for 2 years, the account is transferred to a dormant section. Why do we do that? We do that in order to protect the customer's deposit. Because if the account is unattended and not being serviced or not being transacted, then the chances are more that such accounts become more vulnerable for frauds, right? So in order to protect the customer deposits or to protect the customer from such kind of vulnerability, the banks have a practice of transferring them into a section or a category called dormant account. Doesn't mean that account is a non-operative account. It is transferred there with the intention of protecting the customer. So once an account is transferred to a dormant section, the banker has an obligation to inform this to the customer, right? So doing transactions on a dormant account is a different category, different kind of a process. Once an account is transferred to the dormant, so I'm touching on that also, credits can go into the account, but no debits are permitted when an account is transferred to the dormant account without the customer personally coming and making a request. Dormant accounts cannot be debited. So that control you have to have from through your system from within the bank. If any debit is to be posted to a dormant account, then customer has to personally visit and probably meet the manager or the assistant manager. Why? That is enabling the bank to make a proper or justified decision that it is exactly the person, the actual person who has come to the bank to activate the account. Why? The purpose of putting it in dormant is to protect the customer's this account or the balance lying in the account from possible frauds. So if there's a debit to be posted, then the manager needs to make sure or satisfy himself that it is actually the actual customer that has visited and making this request. Right. And this is another reason, you see your credit cards, you see there's a notification or some kind of information given there, what is the minimum amount to be paid. That is also coming as a part of or as a result of this direction, where customer needs to be given information about his account. That's why all the credit card statement tells you this is the outstanding, or this is the outstanding balance, opening balance, and these are the transactions that you have done through that subject period, and these are the payments received, and this is the outstanding balance, and this is the date by which the full settlement of the settlement payment needs to go in. If you are not settling, this is the minimum payment that needs to be paid. So all this information goes into the credit card statement because of the customer charter. So these are certain factual information the customer needs to be given from the bank. The customers have the right to receive factual information that I mentioned. So coming down, the licensed bank should act fairly and reasonably by ensuring that the bank staff follows the procedures and practices stipulated in the code of conduct. Right. So when a staff member is recruited to the bank, there is a code of conduct that is issued to the staff member to follow. That code of conduct needs to be enriched with the requirement of the customer charter. So the licensed bank should improve the customer awareness on financial products and services and risk by arranging specific financial literacy programs. Now, this is another important requirement under the customer charter. So you have an obligation to enhance the customer's financial literacy. So it's a difficult task for the bank to do this, but remember, it is a requirement on the part of the bank to have some kind of a mechanism or some methodology to enhance the customer's awareness on financial literacy. What do you mean by financial literacy in the layman terms, right? Some knowledge of the customer about the financial product services. How much am I paying for the services I am getting? What are the products I am getting? And where can I go and invest my money? Otherwise, what type of investments are possible? This type of awareness about the financial literacy, and mainly focusing on the products and services offered by the bank. So how can you do this? You have thousands and maybe millions of customers. You take a large bank. So how do you provide this financial service, or rather literacy, to the customers? Actually, this requirement is mainly on the customers who are supposed not to have the required financial literacy. Now, in your customer base, you have customers who are generally can be considered as the people, the known learned customers who have financial literacy. But remember, in the pyramid, the bottom layer, that's the largest segment in the customer base, right? May not have this so-called financial literacy. So you need to arrange maybe seminars, maybe kind of workshops, maybe some kind of maybe a kind of a bulletin, or some kind of activity or action needs to be in place to make the customer more awareness or aware of the products and services that you're offering. Then In addition to that, that's one of those difficult tasks for the bank to meet under the customer charter. So then, coming back to your own product, the customer, the terms and conditions associated with each product need to be made available to the customer, right? So that's why you see in when you are issuing a credit card, you see in the application itself, the bank somehow try to present the terms and conditions, and then you sign for that, obtain an acknowledgement from the customer that I have read the terms and conditions that govern this particular product, and I am in agreement to abide by those terms and conditions, right? So that's the reason why it is captured in the application itself in terms of credit card, right? In order to meet this requirement of the direction. I wonder whether you have ever given thought as to why it is mentioned or rather captured into the application itself, in sometimes in very tiny lettering, the fonts. It is captured there. But I wonder whether how many of our customers do read these terms and conditions before signing. So it has just become kind of a requirement that has gone into kind of as a procedure. But what matters is what is important, and the underlying the requirement of this direction, the customer to know the terms and conditions that govern this particular product, right? So even when you are issuing, say, those days we used to see this in the bank savings passbooks. Under the passbook, some banks I have seen giving the terms and conditions printed in the passbook itself. So the customer cannot at any moment say that I was not made aware of the terms and conditions that govern this product. But in today's, the present context, these passbooks are no more in operation in some other banks. Then you need to have some kind of a methodology to make sure that you provide these terms and conditions to the customer. You can have different ways of doing it. You can either attach it to that product document, or I know majority of the banks do, they have their general terms and conditions when you're opening an account. General terms and conditions that is issued to the customer at the time of opening up an account, and in the mandate itself, when you are giving say opening the first link account, it can be a current account or it can be a savings account. That's where the bank customer relationship begins. When you start up a transaction with the bank customer relationship starts, right, when the first deposit being received by the bank from the customer. That is where the bank customer relationship begins. I think you will learn it in a future module. I see that have been captured into your program. Another lecturer will take you through that, so I'm not going to touch on it. But what I'm trying to emphasize here is the way of conveying these terms and conditions vary from bank to bank. Some banks, on products like credit cards, it's captured in the statement application itself, and the customer signs it. By signing, he confirms that I'm aware of the terms and conditions. Then I mentioned about the passbooks. In some banks, the terms and conditions were captured in the passbook, maybe the last page or the cover page or whatever it is. Then another set of banks have the system of issuing general terms and conditions that's applicable to the customer when they are patronizing the services in common from that bank. Or else, I know certain banks issue in that key fact document, that is, I mentioned right at the beginning, every service and the product needs to have a document called the key fact document. So some capture these terms and conditions in the key fact document. When it comes to the advances or the loan products, right, the terms and conditions are given in the letter of offer. So every time a customer takes a facility or a loan or a leasing facility, that's either a contract in terms of a leasing facility or the letter of offer in terms of any other credit facility. The terms and conditions are given in the letter of offer. So the banking practice is you issue the letter of offer and you get the acknowledgement from the customer, which signifies the acceptance of the offer made by the customer. So the terms and conditions go into that document. So you have again an acknowledgement from the customer that the terms and conditions have been conveyed and the customer has accepted those terms and conditions. Right. So written confirmation should be obtained from the customer that the details of the product, services and their terms and conditions were received, explained and understood. Incomplete documents and obtaining signatures on blank paper documents should be avoided. Right. Now this is very important. Now in most of the banks we see blank documents are being obtained. Right. So it's a kind of a thing that we should totally drop. We should at no cost or at no circumstances we should obtain blank documents, because it's one way it's not ethical at all. Because when you take a blank document signed by the customer, you can write anything there. There have been certain banks at certain points, they get some blank papers signed by the customer. You must never do this. And as a customer, you should never sign a blank document. Right. The reason is, when you do that, they can write anything and everything there and finally claim that the customer has signed this. But remember, the dangerous part of that for the banker is, if the customer or anybody at a later stage can prove and establish the fact that it had been the practice of this bank to obtain blank document, then the validity of the document that you have taken also becomes questionable, and a doubt starts hanging over the authenticity of that document. So as a practice, it is something that you have to be very careful and always make sure that your staff is also instructed not to obtain blank document under any circumstances. Right. So when the internal audit visits, sometimes I've seen certain blank documents available in the credit file. That's totally unacceptable and unwarranted. Right? Disciplinary action needs to be taken against the staff who obtain blank documents, because it's easy. You can have a signature from the customer, then you can fill it up for any requirement. But it's not a done thing. For a very varied reasons, like customer is not aware of what he is going to sign or what he is signing for. And if it can be proved subsequently that have been the practice of this bank, it's not good for the bank. And even the authentic documents you have taken, the authenticity of such documents also can be made questionable if one can prove that the bank's practice had been to obtain blank documents. Right. Then let's see what should be captured in the key fact document. I think we mentioned about the key fact document. Let's see the factual information that needs to go into the key fact document. Description of the product and the service. When you're offering a product, you need to describe and say what that product is all about, or what that service is all about in brief sense. It has to be given in the key fact document. I wonder whether any of you all know that there is a document that the bank has to have, which is known or identified as a key fact document. It's a requirement. So you, if you are into branch operation, you need to know what this type of documents are and what are the things and how do you administer this document, the key fact document, right? So the description of the product, then the financial and other benefits to customers, including any incentives and promotion, right? So the financial benefits that the customer can get from the product also needs to be mentioned in that document. These are very, very important and critical because subsequently, if there's a dispute between the customer and the bank, and the customer can prove that I was not told about this, right? Now, the example is, right, now you have different banking products, especially in comes to loans, right? You have different types of loan that have been differently structured, right? The structure of the repay, especially in terms of repayment, the structure of a housing facility or a consumer loan or a personal loan is quite different to the structure of a business loan. I think, unfortunately, I can't see the audience, right? Think about it by yourself. When a business loan is issued, right, there is a fixed installment that you have to pay, and the interest element varies from time to time. Interest rate is the same, but the amount that the customer pays on a business loan reducing is reduced over a period because the installment the customer pays while remaining static, the interest component keeps on reducing while interest is worked out on the outstanding balance of the customer at that particular month. For instance, you take a loan of 1 million, and if it is to be paid, or say 1.2 million, if it is to be paid over a period of 1 year, the installment that you have to pay every month is 100,000 because you will settle 100,000 each over a period of 12 months. So the capital of the loan will be settled over a period of 12 months. The interest component that you pay for that loan, it varies. First month, you have to pay interest for the entire 1.2 million. When it comes to the second month, if the installments have been duly paid, the outstanding of the loan is 1.1 million. Then you will work out interest for 1.1 million and not for 1.2 million. So the interest that you need to pay for that month is reduced in comparison to the first month. So likewise, as time passes on, the interest element reduces, but the capital remains the same. That's the business loan. Now, in terms of a housing loan or a personal loan, where we call it the equated installments. Equated installments, the amount that the customer pays every month remains the same. Remains the same. How does that happen? It is worked out in such a way that the fixed amount that you pay on a housing loan or a consumer loan or a personal loan or for that matter a leasing facility, the amount that you need to pay for the month just the same, exactly the same, unlike in a business loan. Then what happens? The interest and the capital component varies from time to time. Whilst the total amount paid during the month is static, whilst it remains the same without any change. So initially, in such loans, you pay more interest and less capital. As time moves on, the interest element reduces, the capital increases. So if a loan is given for 2 years, right, when you come for the end of the first year, after 12 months, you will see the interest and the capital paid by the customer is equal because Initially, you were paying higher rate, higher component as interest, and lower component as capital. In the second half, you will pay more capital and less interest, but the total amount that you pay over the period remains the same. Right. Now, there is a situation where, unless the customer is aware, as per the customer charter, customer needs to be told about the full details of this. So, majority of the cases, sometimes you see customer comes for a premature settlement and says the capital of the loan has not been reduced substantially if it's the first half, because in the first half you pay high in component of interest and low component of, in comparison, capital. Now this phenomenon in these two different types of loan need to be explained to the customer. That has to be given in the key fact document, or that the customer needs to be made aware of this requirement. Otherwise, customer can always on a later date say, I was not told and I was not made aware. So the customer charter makes it compulsory for the bank to make the customer aware. So the financial benefits, then the fees that you charge, right? It can be a service fee, or it can be a maintenance fee, or it can be a documentation fee, so it can be legal charges, so it can be anything. If there's a fee that is applicable to the particular account or for that particular service, that also needs to be, the interest rate also needs to be mentioned in the key fact document, right? And then the procedure that you need to follow in obtaining the product or the service also needs to be given in the key fact document. Then the major terms and conditions, if not everything, also needs to be given in the key fact document. And also, very importantly, the complaint procedure. If the customer has any grievance, if the customer has any complaint to be made, the procedure that he needs to be followed, he or she needs to be followed, also needs to be given in the key fact document, or the bank has another methodology, as I mentioned. The common things can go into one document, say general terms and conditions when you are dealing with the bank, right? So this information needs to be provided to the customer. That's important in terms of the customer charge, right? So in an advertisement also, I think we mentioned at the beginning, no information that can mislead the customer should be given in an advertisement, right? Now, that is why the banks have to give what is this product, what are the benefits you are getting, and also it needs to say the risk category of the bank, how the that bank is rated by the rating agencies. All those are given in the advertisement, right? Right. The following information should be conspicuously displayed in the head office. So we mentioned that is why in your customer lobbies, this information about the interest rate on, especially on the deposits and also on the loans and also on the exchange rate, are displayed in the customer lobby, either in notice board or in the modern banks. We see TV screen is there, and from time to time the screens change, and the interest rates, the deposits, advances, the forex rates, and the type of product that you have, and what are the information, all these things. This, in the modern bank, it throws out through different screens, and so that the customer can see this when sitting in the customer lobby. Buying and selling rate, the credit rating of the bank, and the underlying specifications, if any, right? The ombudsman details, holiday notices, and all that need to be displayed. The statements, I think we mentioned about it, the minimum payment, so we mentioned this. Then the licensed bank should improve the customer awareness through the specific financial literacy program that we mentioned. The code of conduct, let's see what are the things that you need to take in the code of conduct. The customers have right to know the details of the agents appointed for the customer service. Now, some banks appoint agents to perform certain functions on behalf of the bank, right? So, in terms of the customer or from the angle or the viewpoint of the customer, whether it is the bank employee who deals with or an agent deals with the bank or representing the bank, it makes no difference for the customer, right? So if a bank is deploying agents, so we know in some bank, especially you deploy people to do canvas business, credit cards, personal loans. I think most of the banks have business development officers, BDOs. Some of them are on the bank payroll, some of them are not on the bank payroll, but they are outsourced people, but still functioning as an agent for the bank. So then those agents also need to be abide by the customer charter because it's a direction. So establish a management information system regarding the complaint. So that's the next point, right? So when agents are appointed, agents also need to be given the due training and made aware of the customer charter requirement so that they will also follow the right procedure. In fact, you have to do KYC of the agent that you deploy. Because what happens is otherwise, you may not know. Now, you have KYC, know your customer, right? There's another requirement, say KYE. KYE is know your employee. Know your employee, KYE. It is as equal as from an importance point of view to KYC. If you don't know who your employee is, by not doing due diligence and KYC on your employee, you will exactly not know what kind of person he or she is, whom you have hired to work as an employee of the company, right? So, in addition to that, you need to have a very good quality MI, management information. Management information. Without information, you can't make solid, valid decisions. Any management decision that you are taking will heavily dependent on the management information you have in your organization or in the system. So we call it MI. So such MI needs to be of high quality and the information needs to be of high integrity, right? And the information needs to be very much in time or on time, timely information, right? So it's an important thing for the bank to have timely, informative information, which is essential for management decisions to be taken to make a proper offer of services and products to your customers. So, having MI, quality MI is a very difficult task. Most of the banks have this issue. So, you have to, of course, the MI start from the branch itself because the customer information, say let's go to the very basic management information or information that needs to be captured into the system. The starting point, the capturing point is the branch, not at head office. So as this program is mainly focusing on branch operations, I would appeal to those who are working in branches to make sure that the information you capture into the system, A, is accurate and they are up to date, and it gives the latest information, right? Now going into the KYC, the important information in the system start from the KYC. I think last Sunday we discussed about how important KYC is from a regulatory point of view. I think in that session I mentioned KYC is important from a regulatory point of view, as well as KYC is important on another dimension as well. For me, who have been in the banking business for about 3 decades or more than that, KYC is more important to a banker. Now we are talking about MI, quality MI, right? KYC is more important to a banker from a business point of view. That's my version. Of course, it's a regulatory requirement. You have to have your KYC in order to meet the FTRA requirement, Financial Transaction Reporting Act, and the FIU guidelines. So you have to have KYC. But as a practical banker, leaving that regulatory requirement aside, KYC is extremely important for you to do your business. It's a business tool. I think this is very important for you as the branch banking people, those who are in the front line, the first contact point with the customer. How important KYC, the quality, accurate, timely information about the customer, how important it is for you to run your day-to-day business. So for me, I treat it as more kind of a business requirement, let me put it, as equally important to a regular requirement of having KYC. A simple reason. Now under KYC, you try to assess the customer, who this customer is, where does he come from, what is the type of business in which he is, what are his sources of income, what are his levels of income, what are the assets that he has, right? Just think about it and ask you the question, how important this information for you to sell a product or a service, right? Now, a customer walks into the bank and you can't expect that customer to know the type of product that you have on your shelf to be offered to him or her, right? How many products you have? Unfortunately, this session, there's no interaction. Just ask you the question, how many products are there in your bank? Can somebody answer me? Can somebody answer? Ask yourself the question. I'm sure you put this question to 100 bankers, 99 people, for sure, I would say 100 people, all 100, would not exactly know how many products are there in the bank to be or on your shelf to be offered to the customer. These are facts. Not only you, even if you ask the product development division of your bank, how many products are there in your bank, in your shelf to be offered to customers, I don't think anybody will give an immediate, accurate answer. So coming from a situation like that, and of course, you go through the annual report or your business report and all, you boast to say, okay, we are a banking supermarket. We have X number of products in terms of deposits, in terms of services, in terms of loans, in terms of advances or in terms of various other banking needs. We have so many products, but you yourself don't know how many products are there in your bank, right? So how do you expect the customer to come and ask for the right product to suit his financial requirement? Now, this is about, we talked about the financial literacy also. Financial literacy is to know the details of the banking product that is available in the market, right? That's financial literacy. Where can I get the best product for me? That's financial literacy. And the banks are supposed to make the people aware of or rather enhance the financial literacy of your customers. These are all customer charter requirements, right? Now we were coming from MI. The importance of MI. KYC is the basic, the fundamental of the management information you have in the bank. All the other MI is stemming from that, right? Now, if you don't have if you don't give the information to the customer about the product that you have, various type of benefits that you can derive, and what is the best product that suits the customer requirement, customer will not know that, right? And I think in the modern banking, you have the cross-selling, and the frontline bankers are given cross-selling targets. Am I right? Unfortunately, I can't hear you. Think about your bank. Think about the cross-selling, the ratios that you need to achieve, given as a KPI. KPI for the bank, KPI for the manager, KPI for the branch, an individual KPI for you. When your final evaluation being done at the end of the month, your KPIs will be evaluated, assessed to see how much of cross-selling you have done. So if you don't have proper KYC, how are you going to cross-sell? The KYC will tell you what is the potential of this customer. Customer may not know about the banking product, most of the time, and I have come across in many occasions. Customers do come and ask for overdraft. I personally experienced this many occasions when I long years ago working as a branch bank. I mean, I have heard this. Is OD meant for to buy vehicles? No, but it's one of the most popular banking products in the market today, right? Huh? OD they know the bank for. OD they know the manager market. This is what we hear, right? That is because the customer knows that product, and he thinks it's the coconut tile for every need. That's why he's coming and asking for OD. But the customer doesn't know OD is not meant to buy a vehicle, not meant to be, to do capital investments. It's not the product. If you give an OD to and customer goes and buys a vehicle, I think that's his funeral as well as your funeral and the funeral of the bank also. So he can't settle it. OD is meant for routine working capital. When there are fluctuations in the income levels and your cash flows are varying from time to time, in order to finance the routine temporary working capital requirement, depending on the type of the business in which you are. If you are a seasonal income earner, where your cash flows just vary over a period, or you are having short-term deficits in your working capital, OD is the product, right? So the customer comes and asking for this. Now he may be a customer, who has different financial needs, and he can be a customer to whom you can sell a leasing product, whom you can sell a housing loan product, whom you can go and sell a personal loan, right? Whom you can go and sell a import facility, right? whom you can go and sell a export facility, a packing credit, right? So all this is possible. Basically, coming back to the cross-selling is possible only if you know the customer, if you identify the customer, if you identify his potential, the pluses, minuses, business requirements, his strengths, the weaknesses, all that. So this is MI, right? So the customer charter, it says you have to have good quality information by talking to the customer, by providing the right information to the customer, then it has to be captured in your system so that it can be best made use of when you are taking management decisions by having quality MI. In the boardroom, you take decisions by looking at management information, MI. The policy level decisions are taken by looking at the MI. Right? So KYC is the basic, most the material that you need to have in order to have proper MI, in order to meet the regulatory requirements, in order to do your business cross-selling, offering of products and all that, right? So the governance and the regulatory requirement we are talking, though we are now touching on the customer charter, makes it very important and essential for the bank to have quality MI. Right? If the MI is the quality of the MI you have is substandard, not up to date, questionable, all your decisions will go haywire. It will go wrong. The policy level decisions will go wrong. From a branch point of view also, so you need to know, okay, who are the customers, because you will have your business targets. You will have your KPIs. You need to have so much of personal loan, so much of leasing portfolio, then so much of fixed business loans, then so much of deposits in terms of FD, savings, CASA. You have to have the proper mix in your deposit portfolio. If you don't have, the cost of funds will totally go out of control, right? So you need to have the proper blend or the mix in your deposit base. If your deposit base consists of 95% of FDs and only 5% of savings and current account CASA, you are not doing well. You are not doing well because your cost will go up. Looking at the other side, you have more kind of, the leasing portfolio. The concentration risk is high there. You have to have a proper mix. And in your deposit base, if you have the total deposit base in your fixed deposit base, 60%, 70% revolves around 5-10 customers, you are at enormous risk. Just imagine your total deposit base, FD base, 60%, 70% revolves around 5 corporate clients. See the risk you are facing as a bank, as a branch, right? So I'm talking about customer charter, now I'm moving into other areas also. So, right, I will connect it. Now, if 5 customers contribute to 60 to 65 to 70% of your FD base, just imagine one customer pulls out his deposit. What will happen? What will happen? Your deposit base will get eroded overnight. Then you got to borrow from head office to make the branch profitable. So if you augment this and if you come in terms of looking at from the bank point of view, leaving the branch point, because it's branch operations, I'm talking about the branch, looking at the branch angle. Your branch has to be a profit-making entity. Branch needs to make profit for the bank to make profit. If you are not making your profit, then the bank will have a difficulty at the end of the day in making profit, right? So you have to have this information. For you to have the information, you must have your basic material information that you need to capture into the system, right? So the customer needs to be given information, and you must also have your information. On the other hand, right, when you are capturing information into the system, if you capture it, not accurately, sometimes you see housing loans are categorized as business loan. It's an error, data entry error, done at the time of creating the loan. The repercussions of this is enormous when it goes to the bank level. Sometimes in the branch, you may probably not even think of it, but a mere mistake on the part of the data entry operator or the 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 officer, or maybe the the cashier or the clerk or the person who enters this information into the system makes error, right? So you can categorize a housing loan as a business loan. What are the implications? Serious implications. One thing, your information provided to central bank goes out. Wrong information given. The inspectors come, they will find this. In case they find it, it will be a severe blow. Then your management decisions go bad. Wrong decisions will come because you will see a business loan given categorized as a housing loan, or vice versa. Housing loan given categorized as a business loan. Then you will not exactly identify exactly what your housing portfolio, what your business loan portfolio. And it gets linked to your capital adequacy. Amount of capital that you need to keep for business loan differs from the capital that you need to keep for housing loans, right? The capital adequacy requirement. Either you will have more capital, or it can be the other way around. You will have inadequate capital kept because your business loan categorized as a housing loan. So your capital requirement, or the actual capital that the bank keeps in terms of your the assets are wrong. I wonder whether I'm confusing you, but I can't. Unfortunately, I'm repeating. Very difficult to make a session like this without looking at the audience, right? So in such a situation, very important that you have proper MI, right? Then moving on to the core subject today, the complaints. If the customer has any complaints or grievance, as per the charter, customers, the complaints, there has to be a proper system, a very efficient methodology or a system and a procedure within the bank to monitor and administer the customer complaints. All complaints that is received by the bank, maybe at the branch, maybe at the high level, maybe at the regional office, or maybe at head office level, any complaint made to the bank by a customer, or a complaint can come from the regulator, or the complaint can come from any other stakeholder like the public, all complaints need to be duly recorded, and complaints need to be attended to in a timely manner, in an efficient manner. Even if a complaint is resolved on the spot, still it has to be recorded, and that should go into the complaint resolution as per the complaint resolution procedure that have been the required by the customer charter. There has to be a complaint resolution officer appointed by every bank. So all complaint that comes to the bank needs to be escalated to the complaint resolution officer, irrespective of whether such complaints have been duly resolved or not. Even if it is resolved, it needs to be informed to the complaint resolution officer so that his dashboard will be updated. Right. So the important point here from a branch point of view is that a complaint resolution procedure has to be there for the bank, and you probably as one of those first contact points where the customers do come into contact for the bank, you have to very efficiently handle those complaints to provide the customer a solution for the complaint or for the problem or the grievance that he has with the bank, right? So I don't say that all complaints can be given solution, but a response needs to be given, because some complaints are very valid and justifiable complaints, whereas there are certain complaints which are not valid, but remember, it's still a complaint. If it's a complaint, it must receive that due respect for the complaint, and it has to be handled the proper way. You cannot say you are making a false complaint, so therefore I can't accept. No, that's not possible. You have to have it recorded and give your solution that you have provided, and then you need to take it off from your dashboard as a resolved complaint, but it needs to be captured as a complaint that came and which got resolved at the branch level. So if a complaint is resolved at the higher level, still it has to be recorded and it has to be updated in the dashboard of the complaint resolution office. Right. So all complaints needs to be duly addressed, and if not, it needs to be escalated to the higher level if it cannot be addressed at your level. So these are the customer charter requirements. And the customer needs to be kept informed of the progress made on his complaint, his or her complaint, and then the next level of person to whom, with whom that you should be communicating or contacting in order to know the status of the complaint. So customer has a right to know, and we as bankers have an obligation to have a mechanism within our organization or the bank to have an efficient complaint resolution procedure or a kind of a mechanism to handle such complaints. Establish a management information system regarding complaint and process of resolution as part of the duties of the risk management committee relating to operational risk. Bank should assign an officer with the duty of handling the complaints and management information in each branch to office. So, technically speaking, I don't know whether you are aware or not, the details of the complaints received by the bank and the action taken by the bank in order to resolve them, together with the complaints that are still unresolved at the time of reporting, needs to be presented to the board of directors. It is being given so much importance because the fact that there is a complaint tells the story that there is some operational issue or some regulatory issue, or basically there's some issue that necessitated or that created that complaint or created that environment for the customer to make a complaint. So these things need to be given due attention if you want to have a good risk culture within the organization, which is a regular requirement as well. And also, the customers such as elderly, disabled, and also the customers with low financial literacy have a right to receive special attention to facilitate them to have fair access to the banking services. So in terms of looking at in terms of the physical disabilities, that's why you see the ramps have been built in front of every branch, every bank for that matter. It's an international requirement. Any disabled person needs to have access to any government organization, public entity. That's why all the newly built buildings and even the banks where is newly built or old, It's a requirement that you must have a kind of a ramp-like thing so that the disabled person can access that place through a wheelchair or something like that, because you can't climb steps. So it can be an elderly person who can't climb steps but have the right to access that particular service, and that's why we are supposed to have those physical accesses even for the disabled people, so that they are not discriminated. It's not only confined to the physically disabled parties, the parties who are underprivileged. Now, even in KYC, when you are going through the KYC, it says, why is the banker has an obligation to obtain KYC without which an account cannot be or should not be opened. Customer has an obligation to provide the due information to the bank in order to have that information. At the same time, the direction says it has to be looked at in such a way that the underprivileged people are not denied of their rights to patronize the banking products. While saying all this, that part also has gone into the regulation. It's the part of the FIU guideline to say that under no circumstances, especially the underprivileged, are refrained or rather denied accepting or utilizing or patronizing the banking products and the services. That's a requirement, right? So you have an obligation as a banker to make sure that the entire society is having due access to your bank physically. That doesn't mean that you have to go and carry people to your bank. No. If somebody is interested in receiving the services of your bank, that person should not be deprived of his or her right to walk into your branch, to access your bank, in order to patronize the services that you offer to the public. Right? Doesn't mean that we have to open accounts for every person who visits your branch to open an account. It doesn't mean that we have to grant every loan that every customer is asking for. No, it's not that what's said here in the deeper sense. That's the bank call. If the customer does not suit the bank, we need to explain it to the customer. This is the reason why it's not. But the bankers or banks call themselves banking supermarkets, right? In the today's sense, the banking, every bank likes to be called or known or identified as banking supermarket. That every product, the product that suits the society at large is available in your shelves, so that any person who is interested in seeking your banking products or the services, you have a product that suits him. That's the financial literacy. It may not be the feasible or practical that every customer should be given an export loan, should be given an import loan. No. But there has to be some product that suits the requirement of that customer, and the customer should not be deprived of accessing your bank or the services to obtain the product that suits him best. So you've got to understand it in that sense, right? So customers should be given fair access to banking services as per the customer charter. Right. The customers should foster the relationship with bank, fulfilling their obligations. Right. Now, under the customer charter, so are we to take a small break now? Yes, we will take a small break. We are done on third, it's about 1.5 hours, right? We'll take a break, or are we to continue some more? Since I don't hear you, can somebody from either Mainak or some representative from IBSL and tell me, is it the right time to take a break, or can we go ahead? Okay, we'll move on then. The compensation from withdrawal or cancellation of product services by the bank. Right. It's a requirement once you offer a service or a product to your clientele, the banks can't withdraw that product without paying compensation if such cancellation or withdrawal of a product is going to, give me a second, somebody. Hello? Okay. Hari, मैं point का touch करेला break कर दूँगा नहीं? Okay, right. Okay. So I got a feedback to give a break. So we will touch on this point and then we will take a break. So what I was telling is, once a product is introduced to the market, if the customers are there who have patronized that product, the banks can't, on a one-way basis, withdraw that product from the market, A, without giving notice to the customer, or and B, is without paying compensation to the customer if there is a damage or a loss that's created to the customer by the act of the bank to withdraw such product from the market. Is a requirement. And also, if you happen to withdraw products, now I have seen certain banks had to withdraw certain products. Example, some time back there were certain savings products coupled with some pension benefits. But subsequently banks felt that those products were kind of giving them large losses. They withdrew this product from the market. But as per the customer charter, if you had offered that product, any withdrawal of such product need to be under the approval of the director bank supervision. That such approval will be given only on the understanding that the customers who have already patronized for that product or who have already obtained those products are not penalized. Right? Either the customers who have obtained such products will be given an opportunity or access to continue that product until they wish that they need to come make an exit on the product, or else if the bank is withdrawing that product, such approval will be given by central bank by paying a compensation to the customer who had obtained that product, so that there's no actual loss on the customer. Whatever the loss he is going to incur is going to be compensated by a payment or some kind of other agreeable arrangement. The bank is going to come into terms with the customer. So the customer charter says, in the event a licensed bank seeks to withdraw or terminate the product or service already in contract, Especially deposit product, customers have the right to receive a reasonable time with an exit compensation scheme disclosed in advance. So you have to tell that in advance and come to terms with the customer, and some compensation needs to be paid if the bank has a plan to withdraw or cancel already offered product. So with that, we will take a break and we will try to come back by about 3:30 to resume the second part of the session today. I feel you hear me. I'm trying to get the two-way communication. So when I'm sharing the the slide PowerPoint, definitely I can't get it. But I'm trying some other ways of seeing whether I could get the two-way communication. So you all have the presentation given to you. I just refer to it. I will just do the lecture while trying to see whether I could have the two-way communication. Right. Now, in this agent's business, even though he is an agent, the bank has to take the responsibility for the action of the agent. Right. So, if agent cannot, or not even agent, even the bank cannot harass the customers, they cannot use the abusive language. Especially in debt collection, we know when people go, I think bankers have the duty of secrecy, that we should not divulge the information of the customer to outsiders. That's not a absolute requirement, but a qualified requirement. So in general terms, we say we don't give. So now, but when agents go to collect debts, sometimes they go and talk to the next door and say, now say you go, customer also try not to pay. Then what do? They resort to areas, undesired methods by telling the next door person that so and so has taken a loan, not paid. So by embarrassing the customer, they try to get. But under the customer charter, you can't do anything like that. So you should not be using abusive debt collection practices, abusive language. Then you can't disclose the customers the confidential information to others. Then at the same time, we see, especially when the agents go, I mean, they promise sun and moon and try to sell products, right? So they can do that. So basically, they can't give misleading information about the products and services, right? Then at the same time, in marketing, you say they say forceful marketing. You basically influence the customer to rather force them to buy your products, and that type of behavior is not permitted as per the customer charter, right? Then we know when loans are granted, the security documents and all are generally signed in the bank premises, right? So the customer chart always encourage that, right, not to get these transactions outside the bank. So likewise, especially when the agents go, not the bank staff, bank will be bound by the actions of the agent. If you have learned the banking law, right, the action of the agent will bound the principal also, right? So that's the law of agency. So if you go according to that as well as the customer charter, whatever the bad things or undesired action and activities of the agent will have an impact on the bank. So therefore, when agents are appointed, you have to have a procedure to provide the information to the agent about the customer charter, then about your products and services, so that, and also the behavior that they should sort of practice when dealing with the customer. All that training needs to be given to the agents before you deploy them, because if they resort to undesired movements and activities and the practices, the bank will be liable for breaching the customer charter direction. Then complaint resolution, I mentioned this earlier. So there has to be a procedure, laid down procedure, a well documented procedure in place, giving the customer an awareness and kind of knowledge as to how the customer complaint procedure is implemented within the bank. So while doing that, you will have to make sure that quick and effective resolution on any complaint received is in place. You can't, if the moment you receive a complaint, you need to make sure that there's effective resolution, quick and effective resolution. Practice on it, because the customer needs to know. And if a resolution cannot be produced immediately, then of course customer needs to be given periodic updates or status update of where his complaint states or stands at that particular moment and what action are in on card to resolve the issue. Any complaint you receive needs to be acknowledged to the customer. You have to acknowledge it and say that we have received a complaint and then we are in the process of resolving them. So those are about the complaint resolution and the relief measures. And if a customer is not satisfied with the relief measures that you provide, then of course you have to give them, that's what initially we said, the financial ombudsman details. So the customer should be given the information about the financial ombudsman, and the customer is free to go to financial ombudsman and convey or present his grievance or the complaint where the bank fails to provide a proper resolution to the complaint. Okay. Then at the start itself, I mentioned to you, customer charter is more kind of focusing on the obligations on the part of the bank towards the customer. At the same time, I mentioned there is a certain focus on it, not to the extent of the focus it has on the bank's obligation to the customer, but nevertheless, there is obligation that have been casted on the customer towards the bank in the customer charter itself. As per that, customers also have the duty to foster a very good relationship with the bank-customer relationship, and the customers has an obligation not to borrow beyond his means, right? So what happens is, mostly, one main reason why the facilities go bad is the banks keep on loading your own customer, right? If you see that the customer is good, then you keep on loading your facilities onto the customer. This is generally, we have seen this happening in banks, right? Remember, no customer is good for everything and for anything. I repeat, if you have done credit, you will understand and you will agree with me that any customer is good for a particular sum. He can be the most honest person, but still honesty does not mean that he is good for anything and everything, because lot depends on his capacity also, right? So when a facility is considered for a customer, that's why you say, I think if you have been in the bank, you see the number one customer today can be the worst customer tomorrow, or can be the reason for the downfall of the branch tomorrow. Why? Maybe due to concentration risk, that we have laid all our eggs in one basket, or may have that we have been depending on that customer too much in terms of deposits and loans, or in terms of deposits, or in terms of loans, or in terms of both, right? And also it could be a situation where the customer is good and the relationship is extremely good and we trust the customer, so you keep on loading the customer with facilities. The moment it goes beyond his capacity, what will happen is the customer can't pay. That's what I say. I always believe in credit when I'm handling credit. My question is, okay, customer is good. I mean, you get from branches. He's a very good customer, our number one customer. So there's no risk in giving. I mean, you can't say that there is risk in lending. If there's no risk in lending, right? All this theory is wrong. No? Whatever you do in the industrial banking, there is risk, right? The point what I'm trying to say here is no customer is good for anything and everything. So you need to know when a customer is good, he is good for how much. Customer who is good for 10 million may definitely will not be good for 100 million. Right? Customer who is good for 3 million will definitely not be good for 10 million. So these are facts, hard facts. Right? So customers also has a duty not to borrow beyond his means as per the charter. Then the customer has a duty and obligation to pay the installments well in time without any interruption. Due payment of installments in time without any interruption. Then the customer, in case if the customer is unable to pay his dues on the due date, the bank has the right, or customer defaults or does not pay on the due date, bank has the right or customer has an obligation to pay overdue fees to the bank. I told you when it is somebody's obligation, it becomes the right of the other party. When it is the right of the other party, it becomes the obligation of the other counterpart, right? So the charter says customer has to pay his dues in time, loans, payments, settlements, installment in time. That's his duty. Suppose if he fails in his duty or obligation, then the bank has a right to charge him overdue interest, charge him penal rate, charge him extra interest. So this is also said in the charter. Then if a customer finds himself in financial difficulties, he has an obligation to inform that to the bank as quickly as possible. He can't be hiding it. As per the charter, if you have a problem, financial difficulty, that you're unable to settle or unable to pay or unable to meet your the dues, then you need to inform that to the bank as quickly as possible. So this is very clearly stated in the customer charter, right? The understanding or the reason behind that is when that is informed to the bank also has a duty to see whether if he is in genuine difficulty, to see how best we can help the customer. What do you mean by helping the customer? There are various ways and means of helping the customer if the customer is unable to pay. Now these days you see, you very commonly hear the word moratorium. Is a central bank blessed or central bank instructed moratorium we are now talking about. So the banks don't have to wait till the central bank tells. If a customer is in genuine difficulty and he's not a willful defaulter and he is unable to pay due to some unforeseen reason, it is nothing but fair for the bank to look at it and provide him some kind of relief by way of rescheduling loans, then restructuring loans, providing them capital moratorium, all that type of various, right, and some concessions on interest, different ways and means of helping the customer. So that's a duty and obligation on the part of the bank. On the other hand, if they are in difficulty, it is an obligation on the customer to bring it to the notice of the bank so that a good amicable solution is possible without either party going into some kind of extreme condition where the facility is going to go bad. No. Remember, this is all the public money that we lend, and we have a duty to recover the dues because it's the public money that we have lent, and the customer has a duty to repay. For any unforeseen reason this happens, duties are on both sides to see how best we can, go hand holding and to make sure that the customer deposits are not in danger. The moment a facility goes bad means there is a multiple hits to the bank. You will know this. When a facility turns NP, the facility will be impaired. When the facility is impaired, that affects the bank's P&L, the profitability, and obviously there will be a opportunity cost because that capital is stuck without giving any return. At the same time, you have to pay for that, pay for the capital that is stuck, which have been come in by way of deposits. You have to, whether the facility is bad or not being serviced or not, you still have to pay the customer his interest due for his deposit, right? Then thirdly, it has an impact on your capital adequacy, P&L hit, balance sheet hit, then the opportunity cost, and of course, high cost of administrative cost in order to handle the non-performing facility. You have to send people on recoveries, then you have to probably incur on legal litigation, legal action, and extra work we put on the recovery effort. All this is cost. So when a facility is granted, customer has a duty to pay, we have a duty to recover. If the customer is in difficulty, bank has a duty to give him some kind of, provide him some redress measures like resettlement, restructuring, moratoriums, etc., etc., etc. Right. Yeah. And the customer again has an obligation to provide the information, full, comprehensive, accurate information to the bank. That's an obligation on his part when he or she wants to start up, commence a relationship with the bank. So these are the obligations on the part of the customer. Then also, customer should exercise due care in all the transactions with the bank. Right? Now, if you go back to when all the transactions, the bills of exchange ordinance, probably I saw there's a session for you all. Maybe in time to come, you will go through that. So as per that, when maintaining a current account, customer has to exercise due care. Exercise due care in maintaining a current account. So that will be explained in detail with the kind of the legal background to it, with various case laws being cited. That's a different session, so you will hear. So here again, customer has to exercise due care in all the type of transaction that he carries out with the bank. If the customer comes to know about some fraudulent activity pertains to his or their accounts, he or they have an obligation to bring it to the notice of the bank. There again, under the bank-customer relationship, you all have session that will give you more kind of information. There's ample case law, right? So in the bank customer, our commercial law is English law. There's whole heap of case law. If you have done your banking also, you will know this. CBF, customer has a duty to bring to the notice of the bank without any delay or no sooner, immediately, if they come to know that there are certain fraudulent activity that is going through. Otherwise, the customer can be found guilty for a contributory negligence, and he can be slapped on the doctrine of estoppel. So these are certain legal things which you will know through in the other session. Then the customers should exercise utmost care in handling the PIN numbers given to them. Now we are on an electronic environment platform. For every account, the ATM transaction, you are given certain passwords. We call them in PIN number, personal identification number, in terms of ATM transactions. And when you are on e-banking, of course, those are strengthened with two-factor authentication. You have your password with which you log in, and the two-factor authentication is another further control added to it, where your second password to perform the transaction on the e-platform comes to your designated mobile number or to the email or whatever it is, or that pen drive like gadget that you can carry, and number will be displayed. So whatever this confidential information you are carrying, in order to where the bank has provided you to facilitate your transactions with the bank, that confidentiality needs to be maintained by the customer, because that's his obligation to not to divulge such information, and to exercise utmost care in using the PIN numbers and whatever the password that have been shared with them by the bank. So I think we have come to just give me a second. So we have come to the end of the presentation on the customer charter, which is known as the Banking Act, direction number 8 of 2011. If you have any questions, I see Navod is raising the hand. Navod, what's the query you have, please? Kavi, can you check with him and let me know through the phone? Navod is raising the hand. Yes.
Okay.
Navod hand raise කරලා තියෙනවා. Okay. හරි. මොනවත් questions තියෙනවද අහන්න මේ
ඒගොල්ලන්ට questions තියෙනවද අපිට පුළුවන් ඒගොල්ලන්ට කියන්න මේ message line එකේ type කරන්න කියලා
Okay. Any questions you can please present them either via chat, or if you all are audible among yourselves, you can convey it to the IBSL Mr. Kavinda or Mr. Menaka, so that they will convey it to me. I'm so sorry about this technical defect.
Okay, sir. Like response කරන්නේ අපි කරගෙන යමු නේද?
Right. Hari. Then the customer charter is over. So we will. What I will do is I will take you through because these are branch operation related program. I thought I will talk to you on some. I will have a note sent to you probably on a later date or over the weekend, so you all can just make notes on what I'm presenting on the importance of ethics in the bank in order to maintain or to ensure high level of compliance. High level of compliance. So, what do you mean by ethics? What do you mean by ethics? So, ethics are, it is a set of principles or a set of standards which govern the behavior of individuals or individual and the organization. Right? I would say this way. When there are relationships between organization and its customers or maybe his the other stakeholders. So since here we are focusing on branch banking, branch operations, will narrow it down to the relationship, the customer and the bank, or stakeholders and the bank. So ethics are the set of principles or standards that govern the behavior between these individuals and the organization. Right? Actually, this the term ethic, it is stemming from a Greek word called ethos. Right? It means in Greek it means the attitudes, the various sentiments of moral nature, uh, which would rather guide beliefs of a people or group in an institution. So if you just put it in very simple language, how morally you deal with another person or group of persons or an entity, right? That is called ethics. How moral it is. Now, certain things you can do, but it's not morally acceptable, right? You can say it's not ethical. So I will explain it, you will understand it better, right? Now, if we try to find out, now we understood the meaning of ethics, and if we try to find out why ethics, why that the importance of ethics, why that we should follow ethics, the answer will be very obvious. Why you need to have ethics? A is to safeguard the customer deposit from moral hazard issues. I think we have been repeatedly saying this. At the inception also I mentioned this. We do our business mainly. I think I took your attention to the what is the largest asset. Then you all came with the answer, or as I mentioned, it is the our loan book, more than the fixed assets. The size of the loan book is much bigger. So that's our asset. So this asset is financed mainly by the customer deposits and definitely not by the stakeholder, the shareholder funds. So in other words, we are doing our business using customer deposits, right? So we have a moral duty to safeguard the customer deposits from moral hazard issues. So that's why ethics is important, right? So it's important for the bank to win the confidence of the public. The moment you lose confidence of the public, then you are gone. That is why there are runs on the bank. You say the banks collapse because the customers lose confidence and then they want to take their money out. I think I explained you when I was discussing the AML part and all that. I explained to you, I took an example of you having a total deposit base of say 100 rupees. Then I said how much you set aside for various things, and then if all the customers come and ask for their money, no bank in the world can pay it. That's how the banking system functions. So therefore, the customer's confidence about on you is extremely important. If you then now we are talking about why ethics. So if you are not ethical, and if you do not conform to the ethical practices, the chances of customers losing their confidence is very great. So the answer to why ethics, number one, safeguard the customer deposits from moral hazard issues. Two, to win the public and customer confidence. Then three, in order to meet the regulatory requirements. Now we just now we finished customer charter, which is a regulatory requirement. Right? So you have to have very ethical practices, further reinforced with the regulatory requirements. So therefore, ethical practices are essential in order to meet the regulatory requirements. Then most of the banks are, listed companies. Various investors have invested in us, in our banking corporation, banking company, right? So if you don't have ethical practices, the investors would be reluctant to make their investments in our bank. Other than the customers, there are the various investments. Now, if you go through your shareholding list in your bank, you'll see how many investors have invested in your bank. So if you don't have ethical practices, ethics in the organization, it is definitely not an encouragement for the investors to come and invest in your bank. Thirdly, or lastly, in order to maintain your reputation. So if you are not having ethical practices in the organization, your reputation is scattered, it is tarnished, it is questioned. So you have to have good ethical practices within the organization in order to have a high reputation or to earn a high reputation as a bank with ethical practices. That is why ethics are important, and ethics needs to be practiced and followed by every employee of the bank. Every employee, I would repeat, every employee. Everybody has to have ethical ways of doing things, ethical practices. Right. Now, there was a saying by uh, Sir Adrian Cadbury. He said, from a company's point of view, the codes of ethical conduct are form of safeguard for their reputation. Right? So this was said by Adrian Cadbury, who was a pioneer in corporate governance. Now we talk a lot about the corporate governance, right? A person who rather invented or rather brought in these practices under corporate governance was Sir Adrian Cadbury. You would have heard about the Cadbury Commission, right? Where the banking systems and the practices have been formulated. So this gentleman said, Sir Cadbury said, from a company's point of view, code of ethical conduct are form of safeguards for their reputation. So in order to have your reputation safeguarded, ethical practices are a must. That is what it says. Then we try to identify what ethics are, definition. Then why ethics? With ethics, we always talk about ethical behavior. What do you mean by ethical behavior? It is nothing but what is expected as good and right in the context of morality. Morality is an important word, right? Now, there's a saying, you can fool the whole world for a shorter period. You can fool small set of people for a longer period. But you can never fool or bluff your own self. This is a fact, no? Can you bluff yourself, own self? No. You can bluff the world. The whole world you can bluff for a shorter period, not very long. There's little segment of people you can keep on bluffing them for a longer period in comparison to the period that you can bluff the whole world. But you can never bluff yourself. That is because you have to act honestly. You can't go and bluff your own self. So ethical behavior is what is expected as good and right in the context of morality. Right? If your own conscience says it's good and it is right, then it's fine. Majority, in terms of thinking, you know that it's a wrong act. You know that it's not right. You know that it's not good, but then for various reasons best known to you, you go and commit those. So then there's no morality there. So ethical behavior is, in contrast to that, what is expected as good and right in the context of morality. Then the values, right? So if somebody is having ethical behavior, then that person will derive many values to the society. What are values? In broad belief, value is what is or what is not the appropriate behavior. Right? We talked about the ethical behavior. Ethical behavior is what is expected as good and right in the context of morality. Then the values are broad beliefs about what is or what is not the appropriate behavior. Is that the appropriate way that you should behave in a particular given scenario? Is that the right way, morally? Right? It may be the right way, not morally, but your conscience tells you it's wrong, but then I do it, to get some kind of a undue benefit, undue advantage. It's not moral, right? So values are that. Just example for value, honesty, right? Then what else? Integrity. There can be so many values. The rest, taking responsibility, being accountable, there can be so many, where you can consider as values, right? Mainly it's honesty, integrity, transparency. So those are the values, right? So ethical behavior is then to do what is expected as good and right in the context of morality in order to deliver or generate values to the society, right? So if you want to go to further explain it, do unto others ethical behaviors as you would have done unto yourself. That's another way of identifying or determining whether it's ethical behavior. You have certain ethical behavior towards somebody else or towards your organization. If you put yourself into that, you call it empathy. You get into the shoes of that person, right? Will you want that person to have the same behavior on you if you are at the receiving end? That's one way of testing whether the behavior is ethical or not. Right? You have certain behavior towards somebody, right? In order to identify whether that behavior is ethical on your part to that person, what you can do is you can get into the shoes of that other person who is at the receiving end when you are delivering it, and see how you would feel if that other party who is at the receiving end when you deliver, if he delivers when you are at the receiving party, how good or bad that you would feel it. Then you know whether your behavior was ethical or not. That's what they say, do unto others as you would have done unto yourself. Right? So in a banking environment, it is important that we have the ethical behavior, and in the governance requirement it is said, we call it the tone from the top down approach. It has to start from the directors, right? The ethical behavior has to start from the board of directors, and we call it the top down approach, having setting example from the top, and everybody in the organization should have ethical behavior. So the directors need to adhere to the code of ethics. It's just one part of their ethical behavior, right? Regulatory requirement, meeting the regulatory requirement is just one part of it, ethical behavior. So ethical behavior, it goes much beyond the regular requirement. So organization, a banking environment, a banking organization always need to have the people within the organization, starting from top to the bottom, who are practicing ethical behavior and ethical practices on dealing on their relationship. So you are in the branch banking, or who are undergoing this certificate course or the diploma in branch banking operations, need to take this very seriously into your minds and the hearts, that it is the duty of everybody in the bank, especially the people in the branches, to show and deliver ethical behavior, and when they are dealing with or acting on relationships or conducting themselves or showing their attitudes, right, to foster such relationship through ethical behavior. Right. So in contrast, we need to understand what governance is. Ethical behavior will always support governance. Just because that you have governance does not mean that you will have ethical behavior all the time. Right? So, while you have governance from one side or one end, having ethical behavior will be the icing on the cake. Definitely, will be icing on the cake. Right? So, governance, in contrast, is how the business is managed or how the business is run. So, good governance is how good, how ethically, how compliantly the business is run by the stakeholders of the business. So we very broadly, we talk about the corporate governance. So the OECD definition for corporate governance is, there again, it says it's the relationship between different stakeholders. Right? If you learn a little bit of compliance, you will see there are various definitions given, but I would take the OECD definition given on governance, which tells that governance or the corporate governance is the various relationships between the stakeholders. When you say stakeholders in a corporate entity or say in a bank, who are the stakeholders? You have the board of directors, then you have the management, then you have the staff, then you have the regulators, then you have the law enforcement agency, then you have your peer groups, the banks, then you have the competitors, then you have the general public, then you have the lawmakers, the parliament. All these are stakeholders of the organization. So the relationship you have between these different parties are called corporate governance as per the. So it's not on the face of it, on the surface of it. When you talk about the relationship, if you remember, I mentioned in any relationship, you have rights and obligations. You have rights and obligations. Even in a relationship between a parent and a children, husband, wife, employer, employee, these are relationships, right? The doctor, patient, there are relationships. So when in any of these relationships, remember, there are things called rights and obligations. The right of one party in a relationship becomes the obligation of the other party. The obligation of one party in a relationship becomes the right of the other party. Right? So that's why the OECD definition says in corporate governance, it is the set of relationships, which means the set of obligations and the set of rights on different parties in continuing or conducting this relationship, which means each party has an obligation, other party it becomes a right, other party is a right, it becomes an obligation. So when these two requirements are meeting together, very well synchronized, very well agreeing, then there will be very kind of soothing activities, soothing relationships moving on, which could facilitate a good governance, a corporate governance within an organization. Right. So we now try to understand what ethics are. Then we try to understand, we understood now what is meant by the governance. Right. So ethical values on good governance are, it would heavily dependent on things called the transparency, paradrushya. The outside needs to know what's really going on. There shouldn't be any hide and seek. There shouldn't be very, things happen behind the curtain. Transparency has to be there. Then responsibility and accountability has to be there. Right? No point in just having responsibility without accountability being tacked onto it. And no point in making somebody accountable without assigning him the responsibility and empowering him to deliver. These are all, linked, connected. There's a saying, honor comes with responsibility. Honor comes with responsibility. Just think, you get honor. With the honor you are getting, there will be a responsibility casted on you. Right? Say if any of those branch managers here, branch manager, there's a honor to sit in that manager's chair. Honor doesn't come singly or alone. It comes always with a responsibility. Right? So it applies to every position, every act. If there's honor, there's responsibility. Under good governance, honor, responsibility, and it should always be tagged with accountability. You can have responsibility if you are not accountable for delivering it. People will not take it seriously. You can say, I'm responsible for do this. But if you are not accountable, who cares? Responsible, just a word. No, it shouldn't be the case under governance. Every person, even the person who sweeps the floor, There is a responsibility and there has to be accountability, whether it was done properly. The supervisor sitting above has a responsibility and has an accountability to make sure that it was done. Just apply this concept in any of the relationships that you can think of, especially in the bank or in a working environment. You will see you need to have people with responsibilities and who are made accountable for delivery. That's why you have the KPIs. That's why you are accountable to deliver the KPIs. Right? That's why you are assessed on a periodic basis. Half-yearly assessment, year-end assessment. Right? So it's important. So these are the principles of good governance and coupled with the ethical behavior. Right. So then, having said that, what is compliance then? Compliance. All these are all connected words. Ethical behavior, good governance, compliance. What do you mean by compliance? It is nothing but, it means adhere to, stick to. Like, say you have that, now we talked about the customer charter, right? Banking Act Direction number 8 of 2011. It's a direction, so you have to comply with it. I mentioned to you, this is a direction. There is an order by regulator. You have to comply. There are no deviation. That's compliance. Adhere to. You need to comply with, right? So now, by complying with something blindly may not derive the desired result if you do it blindly, right? But if you are kind of rich or enriched with ethics, then you do it not blindly, but with a kind of understanding or with some meaning behind it, right? The ethics without compliance is futile, right? On the other hand, complying with something blindly is also is a blind act. You just do it for sake of doing, without knowing why that is to be done that way, right? So both ways, compliance and ethics. When you talk about compliance by itself, it means to adhere to something, but compliance without ethics is blind. On the other hand, ethics without compliance is futile. Hence, ethical approach will help to comply with the rules. So, you need to comply with the rules and regulations, the internal procedures, with an ethical approach or ethical attitude. So, it will make things more kind of fruitful, and you will do it with some meaning behind it, and it's a kind of a moral duty. So then only you will reach the full benefit of ethics, compliance, and good governance, right? So if you just think of what are the elements of ethics and governance, what comes to mind is like, honesty, as I mentioned, honesty, integrity. It goes hand in hand. Then the responsibility. Then the trust that you can, keep on somebody. Can you trust that person? You say, that rascal, he cannot be trusted. Right? But if you can trust somebody, see the amount of the relief you get by depending on somebody. If you have to depend on somebody who cannot be trusted, see the mental agony. Right? So, then the good quality leadership. That's also very important in a good governance or a ethical environment. So with that, I think we discuss about the corporate governance. So I mentioned OECD, it's about the relationship between various stakeholders in an organization. So while saying that it is a set of relationship, it says the pillars of good governance are of five folds. What are those five folds? It's the transparency, it is the responsibility, and it is the accountability, and it's the independence, and it is fairness. Very important, all these words. In good governance, there has to be transparency. There should be hide and seek. There should be things going under the carpet, behind the curtain. No, everybody should see whether what's happening is right. Right? Then the responsibility. There has to be people who are responsible for that. Then people who are accountable for that if responsibilities are not delivered. Then there has to be independence, very important concept. Independence. Right? This applies to good governance of any organization from top to bottom. There are certain functions. The independence is extremely important. Right? Just take this concept down to the branch banking operation. Right? Now, just take the dual control system that you have in the organization. Dual control system. Right? So, when you have the dual control system, just take a cash payment. Take a cash payment. Right? Then there are, of course, now these things are like, the certain functions are given. But the good old days, the cashier can't authorize payment. Cashier can pay. Right? Now, of course, certain limits are given to certain cashiers to pay, taking the, the risk factor into consideration and various other things into consideration. Right? So, under dual control, it's, cash is lodged in safe under dual control in the supervision of two key holding officers. It can be manager, assistant manager, or assistant manager and the chief cash officer, whatever it is. So independence. So each part is independently responsible. Each part is independently responsible. The maker checker. Somebody makes the entry in the system, the checker checks and approves it in the system. Data entry part. So maker checker. So the independent. So you can't say, okay, he posted, then independently I don't have to check. No, that is wrong. You have a duty to check. That's independence. Of course, this you can sort of augment this when you go to the higher level of governance, right? So the defense lines, I don't know, some of these things may be a little too technical for you. Without knowing the audience, it's very difficult to pitch my sessions because I really don't know who is sitting in my audience, right? Then some of these things I may not be pitching it properly, so that you have to excuse me. So if you know a little bit of, the corporate level, the business model, there are, in a banking environment, we call it 3 lines of defense in the operational framework. First line of defense, we call it the operations. That's the first line of defense. That is where your dual control comes into play. So each transaction that happens at the branch level, the front office, even the back office, the first line of defense is maker checker. That's the first line of defense. The second line of defense, so that means if there's an error, they have to detect at that point. That's the first line of defense. Second line of defense in the banking environment, we call it risk and compliance. That's the second line of defense. Okay. as per theory. I have a slightly different view on my personal note, but let not confuse you on it. I'm saying what the textbooks say. Second line of defense, they say, is the risk and compliance, right? So there's a certain checks and then the controls and all that they have to. That's second line. Third line of defense, they say internal audit. Third line of defense. So the second and the third line of defense, which is consist of risk, compliance, and audit, these are independent functions. I was talking to you on independence, the importance of independence in good governance, especially in a banking environment. All these are independent functions. The independence of such function is to so great extent that you may know or you may not know that the heads of these three business lines or the business verticals or the operational verticals are reporting direct to the board of directors and not to CEO. That's the independence that this the corporate governance has laid on this business model. The head of risk does not functionally report to CEO of the company, but he reports to the board subcommittee chair, who is a director. Board integrated risk committee chair is the person to whom the head of risk or the CRO reports functionally. If you take the head of compliance, functionally reports to the same person, BIRMC chair, who is a director, independent, non-executive director. The chief internal auditor, again independent, he reports. He also does not report to CEO functionally, but he too reports to the chairman of the board audit committee, who is again an independent, non-executive director, a member of the board. Right? Now, the second and the third lines of defense heads who are supervising this, CRO, CCO, and the chief internal auditor, CIA. All these three senior officers in the corporate management, they are reporting direct to the board. That is in order to give them the independence that they require to perform their jobs, to have the transparency, to make people responsible and accountable. So therefore, now you see how important this independence is in terms of the banking business model, and finally, the fairness. You have to be fair in discharging your duties, right? You have to be fair. So just to recap, the pillars of corporate governance, I said it's about in 5 folds: transparency, responsibility, accountability, independence, and fairness. Right. Then, okay, we got some flavor of as to what ethics are, what governance is, what good governance is, then what are the meanings of ethics, why ethics, all that. And let's see the red flags in ethics versus business. Ethics versus business. When we say ethics is the moral set of understanding, right? Now I think you are getting into, you should get the flavor of what I am trying to tell you, right? Now, there are certain red flags which gives you some kind of indication that ethics are going to be in danger now, or rather the good governance is going to be in danger because it's moving away from the ethical behavior. Have you heard this type of sayings? If we take it up, people will start asking questions, so just leave it alone. Have you heard this type of conversation? Don't take it up. If you take it up, there will be 101 questions. I'm sure you'd have heard this. So in my view, it's a red flag. So you don't want to take up something because there are going to be questions. And the question that arises on that is, why should there be questions? Because it looks that there's something fishy. Right? So if you hear this type of conversation, always remember, it's triggering a red flag against ethical behavior. Then again, you might hear, we have already done it this way, so there's no big deal. What does it sound to you? That's how we have been doing this for decades. What's the big deal in it? Referring to some unethical practice. It's a red flag. And sometimes you see, okay, so many, undesired things happen. And you say, don't worry about it, man. These instructions come from the top. Have you heard it? These are red flags. And then you say, okay, this is about your bonus and my bonus, just forget it. This is all about your bonus and my bonus. So just forget it. These are red flags in ethical behavior. So when you hear this type of conversations or come across, remember, it could be a kind of a situation or a beginning or a happening which threatens the good governance, which is a must for a banking environment or banking organization to have the high level of standards which has to be in keeping in line with the moral standards in order to win or maintain the confidence of your customers and other stakeholders. So it's important that every banker needs to be aware of this ethical behavior. Right? Now, the approach to ethical behavior, it can come by way of different ways, right? It can come by way of compulsion of law. The law compels it. Now, go back to the customer charter that we discussed. So many things are very ethical, what is mentioned there. Why? Customer needs to be told about what he is buying. There should be misleading information given to the customer about what he is going to buy. Full information needs to be given about what are the terms, conditions, everything. So full transparency is there. Right? So that has come by way of a direction, by the compulsion of law, that ethical behavior. Right? Then there are certain ethical behavior like actually the direction, like it came by way of direction, by compulsion of regulation. Then there are certain ethical behavior that have been cast on you by compulsion of law. Law tells you cannot do this, you have to do it this way. Certain ethical behavior. You have to take KYC. It's a law. Section 14, or rather Prevention of Money Laundering Act, Financial Transaction Reporting Act. And the FTRA has given, set up, is called FIU, and FIU is empowered to issue direction. So it's compulsion of law, right? The banker's duty of secrecy. You cannot divulge the information of your customer. Section 72 of the Banking Act, compulsion of law. Of course, we call it the banker's duty of secrecy is not absolute but qualified. What does it mean? You can breach this duty of secrecy under various conditions. So this is law. ethical behavior, right? You don't go and tell about the customers, the check returns in your when you are going back in the office vehicle. No, you go and mention this in public forums. Yo, that guy, that check got bounced. You don't tell. You don't tell that account is in NP, non-performing. A guy is not paying. This information we don't tell out. Ethical behavior. Why? There's a compulsion of law on you to maintain confidentiality about the customer transactions, right? So the ethical behavior can come by way of compulsion of law, by compulsion of issuance of directions, regulations and all. And also, it should come from as a tone from the top. Tone from the top. Right? If the tone from the top is not in line with the ethical behavior, ethical practices, it's very difficult to inculcate or create that ethical culture within the organization. Even in textbooks, it says if you want to have a proper compliant culture, it has to be a top-down approach. It has to stem from top. It cannot go from bottom to top. If you don't have the blessings of the top, starting from the board of directors, the top management, CEO and all that towards ethical behavior, it is very hard to create that environment within an organization, right? So therefore, the ethical behavior can come by way of tone from the top, that is from what you get, your integrity, your, the willingness to do it, the moral behavior, or it can come by way of compulsion of law, it can come by way of various directions and regulations issued by the regulator. Right. Then we can think of, certain policies on ethics. Seek genuine commitment rather than being a cosmetic exercise. What does it say? Seek genuine commitment towards something rather than making it just a cosmetic exercise. Example, KYC. KYC, right? It's a regular requirement. But I told you, my personal view is, for me, I value it as a business tool, no second to the regulatory requirement. It's a regular requirement, it's fine, but if you don't do it, you can be fined. There can be various serious repercussions. But as a practical banker, I recognize it as a business tool, and I lay more liking and attention to it as a business tool than a regulatory requirement. That doesn't mean that I don't respect, it is there. But even if the regulatory requirement is not there, I would prefer to do KYC because it's a business tool. It's a business tool, right? I can give you a few examples, long years ago, maybe it's about 22, 23 years ago. I happened to be a manager of a corporate branch those days. Then it had to do a kind of a customer get together. That's a time that, these concepts came into light. Then they had a huge customer base. So you can't invite every customer. Then I was requested by head office to select maybe 250 odd customers out of 25,000 customers I had in that branch. So how to select, right? So I instructed my staff, give me some names, important customers. So all knew the customers, the credit loan customers, then all knew about the TOD guys who comes day in, day out, right? Checking balances every now and then. All knew. I just got a feeling, who are my deposit customers? Then I just thought of it, who are my deposit customers? None of the people, I had about 45 staff in that branch at that time. None of the 45 people, including myself, knew who are our deposit customers except for very few. Right? I ran a report to identify. I had massive number of savings customers who had millions of deposits in their savings account. Millions of deposits in the savings account. Right? But none of the bank knew these customers. They were silent customers who carried these large deposits in the savings account. For some reason best known to them, or they probably didn't know that they can, invest this money in FDs and all that, or whatever it is. So, that's a business tool for me, which I didn't know. Probably I mean, we were sitting on a kind of a gold pot without making use of it. This KYC, For me, it's KYC. Know about your customer. What does he do? Where does he come from? Right? What I was telling is, if you have this information, and you know what I did? I still could invite all those people. They have huge numbers, having large deposits. I personally took interest and time to call these customers. They were delighted. And most of them were saying, this is the first time the bank manager spoke to us. Delighted. So I was able to, throw them credit cards. They're delighted. They never expected. They didn't know. Right? And for few of them, I said, okay, after talking, right? So can I offer you a leasing facility? For sure, because I'm having cash back. Delighted. Right? So that's what I say. Right? And so much of cross-selling you can do. So get to know. That's what I'm saying here. The point what I'm trying to say here is, right? So, under ethics, get people to seek genuine commitment to do something rather than just doing it as a routine or a cosmetic exercise. Right? So, unfortunately, I can't see the audience. Right? You just put yourself into that position and see how important this certain concept that I'm sharing with you as a practical banker. That's what I say. For me, it's a business tool than a regulatory requirement. So, with that point, I'm linking it to it. Whatever you do, get them to understand why they are doing that. Today, very rarely people question, right? So, you need to understand the banking practices what we have put into practice today are, is older than centuries. The banking system evolved in, the UK, and it came this side, right? So most of the banking practices are time tested for centuries, right? But how many of you go back and think why it is done this way? Why it is done this way, right? So we need to develop this culture in the minds of the younger generation, or the people, the young bankers who probably are starting their banking career or who have just got into the banking career, to think differently, so to understand why it is done this way. Not to go and challenge the manager, but to understand it better. Understand it better. Right? Okay, I'll ask you a simple question. Now that I guess all are from the branch banking. Now, when you collect a check to a savings account, I want an answer for this. right? I would want my IBSL officer to coordinate and let me know. When you are depositing a check to a savings account, we have a practice, get it signed by the manager. Okay, manager has to sanction it for the check to be deposited to the savings. Why is that this practice is in place? I need an answer from the audience. Kavind Otana Henoanang, if you hear, please get. So I see Harshani, Sammanani, Navod, Madhushani, Chatura, Kanezamurti, Ishanka, Sandamini. Some participants I see on the screen. Can any one of you tell me why is that it is to be sanctioned by the manager for a check to be deposited to a savings account? Can somebody, either Menaka or Kavinda,
can you
get
hear
the
me, sir?
answer from them? Some comment I need, either the answer or you know or not. Yes, ma'am. Oh, hari, mang on එක තියෙනවා phone. If you know the answer, you say. If you don't know the answer, just convey that. Then this is a point for me. I want to take it, drive it into your minds. නැද්ද උත්තරය? Right. දැන් මාව මේ system එකේ ඇහෙනවද? Right. Now this is a very classic example. I'm sure you would have seen this, but were you ever bothered to know this? Why? Right. So you need to have a certain amount of knowledge on the Bill of Exchange Ordinance, where the section 72 tells. Anyway, it's going to be a long story, right? Going to be a total diversion. So it's a requirement under the section 72 of the Bill of Exchange Ordinance that you have to fulfill certain conditions for you to get the protection under for the delete call conversion under section 72, right? So one of those things, it has to be on behalf of a customer, it has to be a cross check, it has to be in the ordinary course of business, then it has to be uh, cross check in the ordinary course of business. It has to be collected on behalf of the customer, right? So, and it has to be done in good faith and without negligence. So, if you fulfill these conditions, that you get the protection under section 72, even if the check that you are collecting is not a check that is intended to this account. It's a different ball game altogether. So, what I want to say here is, now that practice is there in the bank, but then how many of our young bankers take trouble or have the inquisite to find out why this requirement is spelled out, right? In simple terms, it is the requirement is there. Manager being a more kind of experienced senior person can make the judgment that this check really belongs to this customer by comparing with so many other things. Because then the real person who owns the check is depositing can be established. Otherwise, when you bring a cash check, you probably will not know whether this check is a stolen check or there's no payee mark there, right? Whether it can be collected to the savings account. Because if that check that have been brought, the owner or the person who brought it does not have the ownership for the check, the bank will be liable for conversion towards the true owner of the check. That's the section 72 provides protection in such a way that you have to fulfill these conditions that you will be protected from that delict of conversion towards the true owner. If you remember right, I mentioned one condition is that you need to act in good faith and without negligence. So the banking law tells savings account the fact that it has not been duly introduced, the banking law recognizes it as act of not done without any negligence, right? So for the banking law, opening an account without obtaining an proper introduction is constitute a thing called acted with negligence. These are certain legal concepts and the legal meaning. If you have not learned this part, probably you will not understand it. So the point what I'm trying to say here is get people to do or to perform something understanding the reason why it is to be done this way and why not the other way. So seek genuine commitment rather than doing it as just a cosmetic exercise, right? Then recognize the cultural context. Different cultures, we come from different cultures, the organizations have different organization cultures and things like that, right? So therefore, recognize the cultural context, right? Then avoid credibility gaps between the ethical codes and the actual behavior, right? So these are the policies or ethics, right? If there's a gap between the ethical code, what is said in the ethical code, and the actual behavior, right? So you need to identify this and avoid credibility gaps between these two, right? And always try to link up with the corporate governance best practices, right? Okay. Then you have to demonstrate the accountability, responsibility and accountability. So in ethics, there is responsibility and there's accountability on the people. So the board and the top management involvement and the commitment are extremely vital to have ethics within an organization. That's why I said it's a top-down. It's the top blessing from the top is not there. Very difficult to create a ethical culture, a compliant culture, a good risk culture within an organization. So it has to come from top and top-down approach, we call it, right? Then So in this ethical behavior, you have codes, rule based versus value based, right? So what do you mean by rule based? Codes for ethical behavior, right? You are having ethical behavior, then you prepare code of conduct for ethical behavior, right? Every one of you have signed a code of conduct. The code of conduct when you are probably joining the bank, right? That says that so many things that you should not act in a manner that brings defamatory things to the organization, that harm the reputation of the organization, that you will not engage in similar businesses or any other private businesses whilst working in the bank. So many ethical, the code of conduct, that you should not take the bribes and various unethical gain from your customers, that you should not demand, you should not encourage. There are so many ethical, the code of conduct that you sign. So the codes of ethical behavior, it 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 rule based versus value based. Rule based means focus on preventing, detecting, and punishing violation of the law. Rule based means that if it is done, that ethical behavior or rather violated, it will be punished. Value based focus on defining values and encouraging employees to ethical aspirations. Right? There are no punishment, but then you make them to understand and then promote that ethical behavior and ethical aspirations among the staff, so that the ethical practices and the behavior can be inculcated in the minds of people and can be created within the organization. So, which is better in your view? Is it the rule-based or the value-based program? Right? I of course feel it has to be a combination of both. Nothing can be done only by depending on the value base, right? Or it cannot be solely done by the rule base. So it has to be a good mix of both this in order to have. So researchers also have shown that the companies generally use combination of both. Right. Yeah. How the corporate codes of ethics can be used, right? Now, remember, we were talking about ethics, we were talking about the good governance, then the corporate governance, international industry best practices, all this is to ensure that we have a sustainable organization, right? That we wins the confidence of our customers, that we safeguard the deposits of our customers from the moral hazard issues, which are extremely important for a banking organization. So the codes of ethics can be used to define and create the value systems in an organization. Define and create the value systems within an organization. Define and set standards of expected behavior. You can set standards of expected behavior by defining the codes of conduct. Then improve individual ethical awareness and judgment. Right? With that, you can improve the ethical awareness and judgment of the individuals. Then promote high standards of practices. So basically, you are raising the bar for everybody in the professionalism and in the ethical behavior. Then set benchmark for self-evaluation and monitoring by peers and others. So by doing this, you can set benchmark for self-evaluation. So you can make a judgment and assessment of yourself by self, right? Then inform external stakeholders of the values of the organization. If you go through your annual report, it says the values of the organization. Right? How many of you have read this? Go through this. Huh? Annual report. How many of you go through the annual report? The important document of the bank. You need to go through, and I'm sure it is very clearly stated what are the values of your organization. So none of those values can be achieved if you are not putting these ethical practices and the code of conduct into practice, right? So another reason why, or as to why the code of ethics to be used is to inform the external stakeholders the values of the organization, right? Then why should you have this? I think we discussed this again. We are compelled by law or due to compulsion of law, then safeguarding the reputation, improving customer care, attracting and retaining the best employees, and responding to internal and external pressure. So these are the reasons why why we should have or rather formulate code of ethics within the organization. Right. How much time we have? Another 10 minutes. Right. So I think that for the branch operations, of course, this session I can talk about the boardroom aspect, the corporate management level aspect. So probably which will not have much of a relevance to this audience here, because since it's a branch operation related program, and I will finally take you through under this ethical behavior. We or the banks as a corporate citizen, we have certain corporate responsibilities. Like you would have very commonly and heard this term called CSR project. What does CSR mean? Corporate social responsibility, right? So it can always be back to the ethical behavior, the ethical environment, the ethical approach a company which needs to put into practice, right? So the corporate social responsibility is uh, is very important in terms of an organization. So what does it mean, the corporate social responsibility, right? What does it mean? Corporate social responsibility. Generally, corporate social responsibility, the common idea is doing some projects and then getting the maximum publicity for the bank, using it as a marketing tool, right? So if that is meant, or rather the underlying concept of corporate social responsibility, in my view, it is not the case, right? It's much more deeper than that. But in practice, what happens is it is always used as a marketing tool. Corporate social responsibility. Huh? We provide some, maybe some, the, drinking water containers or some, some projects like that, and get spend about a couple of 100,000 and try to get mileage of a couple of millions by publicizing it. But in real term, CSR has a more deeper meaning, because we call it the triple P, bottom line triple P concept, and the CSR: people, planet, and profit. Right. So these are the three bottom lines under CSR. So it's more than a kind of a marketing tool or a responsibility. You have to use it for the benefit of the people and the planet. Planet means the environment. It has to be a green environment, so socially friendly environment where you create a green world for the well-being, a societal well-being of the society. What you can do, so as a corporate citizen, right? You call it the green banking, green lending, right? All that type of things. The sustainability, how you can sustain the organization, how you can sustain your business, right? And how you can sustain the environment. That's why you call it the triple P bottom line concept, triple P, people, public, and planet, right? So that's basically the CSR, which is also tagged to uh, the ethical practices or the ethical behavior, uh, rather than just simply using it as a marketing tool for the organization, calling it under the tag of CSR project, right? Majority of the cases, that exactly what happens is they use the CSR project as a marketing tool and compromising the true meaning of it and the true reason behind the importance of having the CSR project, right? So, so now I think you got a flavor of how important to run the business in an ethical environment using ethical practices, right? Why the simple reason is the importance of ethics is finally for the reputation, for the reputation. If your reputation is lost, every other thing is lost. For a banking industry, we deal with risk. Everything that you do in the banking industry, there's a risk involved. There's nothing that you do a risk. The higher the risk you take, higher the return you make. Lower the risk you take, lower the return you make. This you can very clearly see from the type of your income earning the assets. What I said is, higher the risk you take, higher the return you take. What is the highest, the riskiest, most product? Temporary overdraft, clean, haphazard TODs. And you are charging them the highest interest. Those days, charging 30%. Now, of course, you can't go beyond 24%, right? Okay. Now, I think it is further reduced. That is because the risk is high, the return is high. The risk is low, the return is low. Cashback facilities. Risk is low because you hold the cash. Return is also low. Spread is maybe 1.5 to 2% or the 2.5 the most. The margin, the spread is low because the risk is low. So high risk, high return, low risk, low return, no risk, no return, right? No risk, no return. So you have to take a risk to do business of banking. If you are not prepared to take risk, this is not the job for you. But the risk that you take, banking is all about taking risk. The risk that you take needs to be a well calculated, well looked after risk that you take while having the risk mitigating tools around it to mitigate the risk you take and having various safeguards in order to mitigate the risk arising, right? So out of the risk, then the important most, I mean, everything is risk. You have the market risk, you have the operational risk, you have the credit risk, and you have treasury risk, you have the exchange rate risk, right? Then you have what not. Everything is a risk, right? Okay. The foreign exchange risk, so on and so forth. Compliance risk, the legal risk, right? Liquidity risk, so many. Everything is risk. So you manage all these risks in the organization. But what do you think the severe most, the important most risk that the banker need to manage out of all this? In my view, it is the reputation risk. You have to manage your reputation risk. If your reputation is lost, every other thing will be lost. Right? So you have to, out of the whole heap of risks that's surrounded in the industry of banking or in the business of banking, reputation risk is my personal view. I think the majority would agree, is the risk that you need to manage extremely well and keeping it on the topmost priority in the list. Right? So, ethical behavior, good governance, the best practices are the tools or the foundation to manage the reputation risk. If you have all this, your reputation risk will be very, very minimal or will come very close to zero. So therefore, the ethics, the ethical approaches and the ethical behavior, compliance, good governance, all these are very important. That's why we discuss this topic of importance of ethics in an organization to maintain high level of compliance, right? So you would have got a flavor of the importance of this on the branch operation. So we are concluding this session, my session on this program. So we started with regulatory risk on AML CFT. And we understood what is AML, what is compliance, what is terrorist financing, how this risk can, what are the consequences, right? All that we understood. Then today we started talking about the, the customer charter, which is again a certain regulatory requirement. Then we touch on the ethics and how important those ethics to maintain high level of compliance. Right. So I would conclude this session by saying it will take, huge time, effort, energy, money, right, and good deeds to build a good reputation. But only one bad deed or one bad incident can ruin it at all, right? So to develop that reputation, you have to sweat a lot, right? Take many good deeds to build that good reputation, but only one bad one can lose it. And it was not only that, I say, even the Benjamin Franklin, one of the US founders, mentioned this as a quote. It takes many good deeds to build a good reputation and only one bad one to lose it. So having said that, I would conclude my session. And if you have any questions, I'm more than happy to answer. And thanks for the listening. I couldn't see the audience. So it's over to you, Menaka and Kavi.